Welcome to Easy Learning. Today I'm going to start off F9 of ACCA. I've already briefed you the syllabus of F9 in my earlier video. Okay, please do check it out for your clarifications. Now, moving to the first chapter of F9, Financial Management. As I've already mentioned, the first chapter is Financial Management Function. Let's see what are the topics are there in Financial Management Function. There are 4 topics. The first topic is the nature and purpose of financial management. The second topic is financial objectives and relationship with corporate strategy. Okay? The third topic is stakeholders and their impact on corporate objectives. And the last one, the fourth one, is the financial and other objectives with regard to non-profit organizations. Okay, so let's start off the first topic under the chapter. Before moving to the details of the chapter, I'll just give you a brief idea. Why do we have these topics in the first chapter? Obviously, the first topic, nature and purpose of financial management. We are here to understand and learn and apply certain things regarding to financial management. So what is financial management? How does it look like? Or what does it look like? And what all things are there in that particular subject called financial management? That is what is the nature and purpose of financial management. The second part, the purpose. Why should we have this financial management itself? Why should we have this financial management? I don't have any idea, ma'am. Why are we having this financial management? Yes, there is a reason. The first and the best thing regarding the financial management is that we all love money. Okay, ma'am, I don't really agree with that. Yeah, there are persons who like money. There are some persons who are indifferent to money. But we are not talking about people. We are really talking about some businesses here. So businesses are about making money. And for making that money, there are so many reasons available in this world. Not just make money. It's not printing and making money. There are so many activities in that particular thing. I'll give you an example. I'm making a product, say for example a paste. I know how to make a paste and I'm making it and I'm using it, but that doesn't actually satisfy me. I know this thing to make paste and I want others to use it. So I'm going to give them. But when I give them, again I'm not satisfied. Yes, there should be something in return for what they are getting, right? That feeling of getting back in the form of money, yes, that is the best thing. That is the best thing about the business, right? Getting back money. Okay, so finally, we've come to the real motive. We want to make money from the business. And mind you, not just making money, the whole process of making money is equally important for persons. Like getting up early in the morning, making money. No. We need to do something, right? That is basically the business is all about. We need to work. We need to use our brain. We need to use our faculties. So we are using all these to bring out some kind of expertise, bringing some kind of service, bringing some kind of products, and then definitely we need some kind of profits out of that, right? So yes, that is why when we have the money, we need to know how, what, when, why, and why not. All these questions has to be answered with regard to money when you are using it in business, right? It is simply not a kid's game. You can have that attitude, but you need to be more serious about the transactions relating to finance. Okay, so that is why we have financial management function itself in a business. The money matters. Now the second topic, we have the financial management. Now how do we do that? Yes, before going to that, I'll just brief you a little bit. I'm going to tell you something from Mahabharata. There was a guru who was teaching the Pandavas the skill of archery, and yes, during the first lesson, obviously, when the Pandavas were asked to point at a bird on the tree, point at the object, right? Yes, there was a bird on the tree. And Guru asked the Pandavas the question, "What do you see, son?" Obvious answer, just like all of us, right? Just like most of us, not all of us, most of us say, except for Arjuna, said that, "Guru, I see the tree, the leaves, the wind flowing through the trees, the branches, the blue sky." And they were happy telling all this because that's what they're saying, and they are trying to make the Guru feel that their eyes is functioning very beautifully, right? But the only answer to the question, the right one, was given by Arjuna. And what was that? You all know that. He was pointing at the object. He was asked to point at the object, and Guru asked, "What do you see, son?" Just like he asked others. Arjuna's answer was, "Guru, I see the bird and the bird only." Yeah, that's the objective. Objective, the objective, you see that only. That is the objective. Same way, you need to have some targets, you need to have some goals to reach somewhere, to focus all your attention, all your work, all your energy to one or points there. That particular point is actually known as objectives. And when you have that objectives in terms, you can write it in terms of money, like this much of capacity, this much of money, this much of sales, this much of revenue, this much of cutting off. All these can be said to be financial objectives. Okay? The second part, there is another word equally important, strategy. Now let's just take another case. Say, there is a mango on the mango tree in your yard, okay? And you want that mango. There are different ways of getting that mango. You can climb up the tree and pluck it. You can ask somebody else to do that for you, or you can wait for the mangoes to be plucked generally by a person who generally does that job. Or you can take a very long stick, right? At the end of you can have a sharp thing or a net by which you can pull that mango into the net or pull it down to the earth. Oh yes, you can pick up a stone and you throw it on it, right? My goodness, there are so many ways of getting that single mango. Same thing, you have an objective, there are different ways to get to that objective, right? Yes, companies do have that. And what is the peculiarity about this part called strategy is that it is a very important, calculated, predetermined, I don't know whether you know all these words, but yes, it is very much using brains. You have to use all your brains to bring out a plan or course of action that is very much, what you call, exquisitely very important. Bringing out the best results in the most best time possible using the best resources. All those things, all best. So that you get the best results. Right? So that is what companies are looking for. So naturally, you know financial management, you know all those things, and now you have the objectives where you have to look out for, and you have the companies working on how to get to that, right? Yes, that is the relation with corporate strategy. Now the third one, the same mango case. Just imagine the mango. There are mangoes in your yard, and yes, do you think you are the only person who wants the mangoes? Let's just check it out. Who are the persons who are interested in the mangoes? You, your friends, your siblings, your family members, your neighbors, the persons who just walk or pass by your yard. And yes, there are persons who actually come to you asking for the whole of the mangoes in your yard for a price. The buyers. They are buying it so that they can sell it outside. See, there are so many people who want the mangoes, right? So same way there are so many people in the business, interested in the business. Interest can be in the form of risk. Here they are not actually putting anything in the case of mango, but in the case of business there are persons who has put some kind of thing into that, and for which they are watching out whether it is going to work, putting their thing whether it is going to work for the company or not. They are actually taking a risk. Another word for the risk is stake. So all those persons who hold a stake in the business, they are stakeholders. Okay? So we have to know who are these people who are interested in the business and how do they impact the first, what we have seen, the strategy, the plan of action towards the financial objective. Their impact on corporate strategy. The last and the final part, we are just using the word profit, right? Apart from making the profit, other bodies or organizations who does business not for profit, non-profit organizations. We just check out the financial objectives and other objectives of these also. These are the 4 topics that we have in this financial management function chapter. Okay, now let's see one by one. The first and the foremost, the nature and purpose of financial management. Here what we have is 5 subtopics. So what are those 5 subtopics? Let's see. The first is what is financial management. Second one is financial planning. Third one is financial control. Fourth one is financial management decisions, and the 5th one is financial accounting, management accounting and financial management. So we'll see what these things are. Okay, let's see the definition of financial management. You can define the word in so many different ways. Leave all that. Just think of these few words regarding financial management. It is simply the management of finances of an organization to achieve the purpose of financial objectives set by the organization. Simple, right? It's the management of finances of the organization to achieve financial objectives set by the organization. Okay? So that is what is financial management. So basically if you take basically this objective is maximization. We have 2 sets actually, the maximization of shareholders' wealth and the other is maximization of profit. But these days the more importance is given to maximization of shareholders' wealth. Okay, now we are moving to the second topic, financial planning. I've already told you, you have a target, you have an aim, you have something to look out for, and how do you reach there? You have to have a plan, right? We are not talking about the strategy part, we'll come to that later. First you need to have a general plan. How do we do that? You have an objective. Now you are taking into account the time. There immediately you have to do something, and then which in the final long run it will actually bring out that particular objective. Okay, so how can that be said? Financial planning. Financial planning is a kind of a planning process where it takes into account all the actions required to ensure something. And what are you going to ensure? You are going to simply ensure. The word is simply, but it is not that easy. It is simply to ensure that the required funds are available at the right time to push off those objectives of long term and short term. Yes, There are actually three periods. That is short term, that is coming under a year, medium term up to 3 years, and above 3 years it's long term. So financial planning, if you do that way for the year, that is for the day, for the week, for the month, for the year, and then slowly if you move on for the 3 years, and then you move on to 5 to 7 years, the planning will set out a course of action to be followed by others. Okay, so now we are moving to the next part. So what exactly are the kind of actions that we are looking in the short term, medium term and long term? In the short term, you need for the business inventory, things that raw materials, all those things you need. You need to have assemblies, all those things you have to purchase, you have to store, all those things come under short term. And definitely you need money for that. Apart from that, you need the receivables, the payables and cash. Receivables are, the business that you're running is actually giving some things for credit. So naturally, you have to get back money. And you are in the same way for the business, you have taken few things from other people, so you have to pay the money. And definitely at times, other than these things, for the general administration, all those stuff, you need cash. And definitely all these are actually short-term things, worrying for cash. Okay, basically working capital requirements are met in the case of short-term financial plan. Okay, now the next one, medium or long term. I'm putting it both together because there is a wide difference, but still you can group them together. Say for the next 3 years, in the case of that, the business has to run more smoothly or more technologically upfront. So you have two projects with you, A and B. Now what you have to plan in the case of medium term is that whether you should take a new plant or machinery, whether you should take it on lease, whether you should replace something from your own factory. There are so many things that you can check out, whether to take up the project A or project B. Okay, these plant machinery for all those things actually are non-current assets. For short term you have current assets, long term it is non-current assets. So buying, taking lease, replacing it, modifying it, alter it, or finding other uses for that, all these are actually part of medium to long term financial planning. Okay, there again you need money. So I hope you have understood what is financial management and how do we plan for the financial management. Now there is another word equally important in the case of planning. It's the control. Okay, we are comparing data from whatever we have, that is actually the past or the historical data, and then we are checking out whether we need to make any kind of changes, modifications, so that we have better results. And we have, in the case of better results, we have to remove all the unwanted things. So that is how we do the financial, that is how we control. So when we put it in the finance terms, it is financial control. Actually, this financial control takes into account what are the changes that are about to happen in the future changes. Let's say a sort of a development in the economy. I wouldn't say the corona or the COVID virus attack is actually a development in the economy, but it has actually made a big turn in the economy itself. Okay, so this is something that people cannot foresee. That part also we have to understand with regard to control. And then there are other things that are happening outside the world. A new technology has come, or the new technology is going to come. So naturally you want that technology into the business. To be in the business, you have to make some controls, you have to take some measures or actions, so that finally this technology is actually adaptable to our business. Okay, that's financial control. Now we're moving to the fourth one, that is financial management decisions. With the planning, with the course of actions, and then finally the control, all these things are there. Basically, what financial management is all about: making decisions. These decisions can be actually put into three categories. The first one is investment decisions, second is the financing decisions, and the third one is the dividend decisions. Investment, I've already mentioned, as the word says, investment, it definitely takes out into account where you can put the money. And the second part is financing. How exactly are you going to get the money for those alternatives? And the third one, you have put the money, the business is run, and you get back the money, and what you do with that money. And the last part, and equally important part, is the management of risk. And risk is involved in everything, and you have to have an understand how to manage that risk quotient also. Okay, just one example with regard to investment decision. Externally and internally, there are different options. Let's check out the internal options first. We can take up new projects inside this particular. We can take up new projects like similar businesses you can take up. You can make new additions to the factory, new plant and machinery. You can invest in research and development, that is R&D, to improve better results, or you can even use more money for marketing or advertising campaigns with regard to the products or the services that you have. These are internal kinds of investment decisions. You're putting money inside the business of your own. Now the external, when parties involved from outside, you have external people also, and that is where the external investment decisions come. Take the case of a takeover, amalgamation, joint venture, takeover, merger. All these are happening not because you alone, the business alone, is doing something. You are doing it with somebody else's business. So naturally, there is an external investment decision. Decisions alone won't work. It has to be in compliance with the external businesses decisions too. Apart from that, you can have disinvestment decisions also. Again, it may involve the external also, or may not involve. Say you're selling off some businesses for some reason. Say it is not making profits as you have targeted, and then you are selling off to make a better place for new project. You have some surplus businesses with you which you are going to just take off and cash in and use it for your own business. And then there are subsidiaries which you can sell and make more efficient business. Okay, so these are the types of investment decisions. Now we are coming to the last part: management accounting, financial accounting, and financial management. Generally, all the information related to finance, there are so many people who want those things. Let's just see who requires these financial information. I'm talking about the external people who are interested in getting the information of the business. The banks, government authorities, tax authorities, trade payables. There are so many other people. Okay? Whoever put the money into the business from outside, they also need the information. Basically, management accounting is using information for internal purposes, while financial accounting is using the information for external purposes also. So what is this internal and external? Internal is that management accounting takes into account what are the different courses of action the business has to take. So inside information. But financial accounting, you just can't keep this information to yourself in the business. It has to be given to persons outside the business. Okay? So that is externally it is being used.